Happy Thursday to you from the floor of the CME here in Chicago. I'm Oliver Slope with Blue Line Futures in your grain market update. The grains have been able to find some pretty good support, but really mostly consolidating for a majority of the week. We're seeing price action in December corn kind of reach the top end of resistance. We've outlined this in our Morning Grain Express for the past several weeks, 366.5 to 369. If you recall, going back to September, October, this was the top end of the range, and I think presents a little bit of stiff resistance for the bulls. December new crop approaching that $4 level where we start to see producers get a little bit more antsy in terms of laying off some risk. If we do fail to break out above this level, I wouldn't be surprised to see a retracement back towards 357 to 358.5. Keep in mind, we do also have option expiration next week. And there are a lot of in-the-money calls for those March options, which could keep a lid on any significant rally. Moving over to the soybean market, the shorts have been taking a swing at a piñata and falling short time and time again. We closed out above 10.06. That opened the door to 10.20 to 10.27. Now the bears must defend that pocket on a closing basis this week. If they do close out above, there's not a whole lot of roadblocks until 10.44 to 10.50. Now keep in mind though, the RSI, Relative Strength Index, is the most overbought since July. Wrapping things up with the wheat market, 470 to 472, I think offers a good opportunity to look to the short side. We're gonna have some other technicals just above that to keep an eye on. But if the bulls fail to break out above this pocket, I wouldn't be surprised to see some sellers step into the market. Presses back towards last week's lows, and the 100-day moving average comes in right about 438 to 428 to 431. So that's what we're looking at to wrap up the week. So you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.